Think you can never qualify for a conventional loan? After all, don't conventional loans require 20% down, an 800 credit score, and an income that would make all your friends jealous? Not even close. Let's bust some conventional loan myths by going over real guidelines. First of all, what is a conventional loan? It's a mortgage that's not directly backed by the federal government. So FHA, VA, and USDA home loans are not conventional because they are backed by the government. Most often, conventional loans follow rules set by Fannie Mae and Freddie Mac. First-time buyers are great candidates for these loans. That's because they come with down payment options as low as 3% and are more lenient about credit scores than most people think. Here's something few people know about. First-time buyers who make their area's median income or less qualify for lower rates than other buyers. Or you can make up to 120% of your area median income in high-cost areas. Check with your lender on whether you qualify for this incentive. There are a few reasons people like conventional loans. Number one, it's easier to get an accepted offer. Sellers can often reject FHA offers because they think the buyer isn't as strong. That's typically not the case, but at the end of the day, you have a better chance of an accepted offer using a conventional loan. Number two, you can cancel mortgage insurance when you reach 20% equity in the home. So when you pay down the loan or the home's value rises enough, you can remove mortgage insurance. You pay FHA mortgage insurance as long as you have that loan. There are other reasons, but these are the two key advantages to using a conventional loan. Now let's take a look at requirements step by step. Feel free to skip to the video chapter you're most interested in. Conventional loans don't require anything close to 20% down. You need just 3% down as a first-time buyer, but you also have options for 5 or 10% down. Lenders offer programs like Home Ready, Home One, Conventional 97, and others. Some have income limits, but some don't. Don't let the lack of 20% down keep you from applying for conventional financing. You can use various down payment assistance programs to cover all or part of your down payment. You'll also need closing costs, which cover things like title, the appraisal, lender fees, and more. These costs can range from 2 to 4% of the home price. You can use seller contributions to cover closing costs, so ask your realtor if it's worth requesting help from the seller. Credit score, one of the most concerning topics for first-time homebuyers, especially those with some credit mistakes in the past. Luckily, the minimum credit score for conventional loans is just 620. However, there's a warning. These loans can be more expensive than FHA with a score that low. Generally, someone with a 720 or better score will get better conventional mortgage rates and PMI costs. Someone without a credit score can prove themselves creditworthy with a history of on-time payments of utility bills, rent, insurance, and more. But what about negative credit score events? You can still qualify for conventional financing, but you might need to wait. Debt-to-income ratio is lending jargon for how much you spend on debt payments each month compared to your monthly income. For example, if your income is $8,000 and your house payment, credit card payment, and auto loan add up to $4,000 per month, you have a debt-to-income ratio of 50%, also known as a DTI. Now that's a little high for conventional loans. Lenders want to see about 43 to 45%, although a 50% DTI isn't unheard of with conventional financing. If your DTI is that high, the lender may recommend an FHA loan. You need 2 years of employment history or related schooling to qualify for conventional. That doesn't mean necessarily that you have to be with the same employer for 2 years, but job moves generally have to be for higher pay or a better position. Lenders don't like to see constant job changes with no apparent reason. You'll need to supply the lender with pay stubs, W-2s, and your employer's HR department contact information. If you're self-employed, you need 2 years of filed tax returns. In some cases, lenders can approve you after only 1 year of self-employment if your previous role was similar. Private mortgage insurance, or PMI, is required for loans with less than 20% down. This is an extra cost that can equal $40 to $50 per month, all the way up to hundreds of dollars per month, depending on your loan amount, down payment, and credit score. PMI is pretty expensive if you have lower credit scores, and FHA may be the cheaper option. Fannie Mae and Freddie Mac, which are the agencies that create rules for most conventional loans, set loan limits each year. As with all loan types, the house needs to be in pretty good shape to be eligible for financing. If it's not, Fannie Mae and Freddie Mac offer renovation loan options to bring the home up to standards. You can do purely cosmetic renovations with these loans too. A cosigner or non-occupant co-borrower can help you qualify for a conventional loan when you don't have enough income or you just have too many debts to qualify on your own. You'll need a 5% down payment to use a cosigner, and you're limited to a 1-unit home. You can use gift money from an eligible relative to cover your down payment and closing costs. You can even compile financial gifts received from a wedding or graduation to apply toward your home. Conventional loans are great, but in some cases, other loans might work better. You'll probably get a lower rate and monthly cost with an FHA loan if a credit score is below about 700 to 720. That's because conventional loan rates and mortgage insurance costs will be higher for lower credit borrowers. If you've ever served in the U.S. military, check your VA loan eligibility. These zero-down loans require no monthly mortgage insurance. And if you're looking for a home outside a major metro area, a USDA home loan might work best for you. You may qualify for zero down. Monthly mortgage insurance is typically cheaper than with FHA or conventional. A conventional loan could be the right choice for many homebuyers. The only way to know for sure is to apply with a lender and have them run your numbers alongside FHA and other programs. With a bit of hard work, you could be the proud owner of a home, courtesy of the tried and true conventional loan. To make things easy, go to mortgageresearch.com and get matched to a lender.